The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Excuse me. It's still cold down here in North Carolina relative to Boston, but I know you guys are getting dumped on again. Talked to somebody up there. They said they have 5 feet in their yard. That's like literally impossible. Maybe there's snowdrifts, but wow. Can't comprehend that being a somewhat southern boy. My goodness. All right. Well, got some jobs numbers coming out. Also, just want to go right into the dollar. This is something we were hoping that was going to pull back into support because we had this recent profile. I'm looking at the daily right now, appear. And you know that we've been focusing and talking about this 93.67 area. Actually got a little bit lower than that yesterday, but we closed above. And lower meaning 93.39. That's just that's a little bit more than noise to me, but you know, on a volatile move down, you got to kind of give that some room. And in the heat of battle, you got to make decisions. And I know I literally, you know, when I do a Bloomberg presentation, I always try to pull up real charts and ask people what they want to see, and just kind of, you know, have the hands out waving towards me, going, give it to me. Because when some of these guys get up there and do presentations and they show the cherry-picked version, you know, it's just like, okay, well, you know, that's great. But, you know, let's see how these things analyze real time as we move forward. And that's why I love for you guys to call, because we get to kind of, you know, look at things and try to figure out what's going to happen to the right of what the chart's doing right now instead of what happened to the left of what's going on right now. So that 93.67 in the heat of battle yesterday, depending on your appetite for risk, you would have either gotten stopped out and been able to get back in that trade because we closed above it, or you didn't get stopped out and you just stayed in there for a little bit of pain. The cool thing is on all the automated strategies that we do, and again, we've probably talked about this, but our stock, because the profiles are somewhat of a function of volatility, and as you notice, they're never the same. They're wide, they're long, they're tall, they're short. It gives you a chance to look at volatilities in a little bit different way, and therefore on the automated strategies, we get a chance to place stops relative to what we feel is the volatility of the profile itself. So that being said, when we come down into a situation like this at 93.67, we may say, hey, well, we've got our stops set at 15% of the value of the span of the profile because we need a little wiggle room around these things sometimes. And okay. And a lot of times on breakouts, because we're going to have noise on breakouts too, we may want to give those, and we do customarily set those somewhere between 5 and 10%. So to get a close and a value on a breakout like back in there, we'd want to see a closing price a certain amount above if we're going to act on closes, if we're going to act on price action alone, and we do studies on these all the time. You know, we may want to say, okay, as soon as price goes above there, at least 5%, it's a valid get out of the congestion area, the balanced area, and then we want to take the trade. So, and that 5% is based on the height or the width of the box. So depending on how you got your game plan set, and we've done studies where we want to give this 25% of the height of the box. And those obviously don't have a lot of noisy situations where we're going to get stopped out. But again, you've got to take some pain, and you've got to give yourself a little bit more room to be wrong on situations like that. So, that being said, what do we do now? So now we got that close, which was right above, and that close yesterday on the dollar was 93.72. Not a big close above there, but as you can see, open up, kind of come back and retest the big time inflection point. And the reason I'm talking about this still from the long side, even though the euro has climbed up, and we're going to talk about that immediately, we've got this bar here, and we've come back down into 93.77 this morning, and now we're trading 93.88. Looks like on my screen, which is a high of 94.06. So there's a lot of things in play here. This profile appearing below price action before when it happened was a very bullish sign. All right, and that means we're really, really hoping that we can get down into some serious support areas to take a shot again. Now, this may not work out. I'm still bullish on this. And the cool thing is you can orient stops around 93.67. But I think we're probably going to have a move up again, even though on the weekly, as shown in the scanner, and I'm going to pull this up. I feel like I'm talking like Daryl Martin this morning, but maybe it's me. I love the way he talks. He talks really fast and gets a lot of things done when he talks. But here we go. Dollar index futures. New box attempting to appear on the weekly. That means a new supply area happening up north. Now, there's that 93.67 area, and here's where we're at right now. This is our landscape chart. So there's that big area right there. New box attempting to appear weekly. That's a bearish sign in general, but we're going to have to wait and see because right now it hasn't happened. It hasn't locked in, and it may not locked in. It's just saying that we might get a new profile appearing on the weekly after Friday's close. Now, I brought this up. This is really neat. And all the TFNN subscribers, yesterday, we changed to default logins where you get the admin version as it stands right now. Now, we've got a C# version of this that's out in the Bloomberg institutional community. It's got a couple more bells and whistles. But right now, you can come into your login. If you haven't seen this bullhorn before, you can come in here and get some defined information on some breadth statistics on 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 11, 12, 13 different situations here. The Nikkei to the NASDAQ to the Index out of Mexico, what have you. And you can also drill down into those situations. So you guys have access to this now. Here's the situation on the breadth on the S&Ps. Last week we just flirted with a breadth close. This is a whole different conversation, by the way. I'm just showing you that this is available to you now. And also, you've got something else coming down the pipe. You've got the automated paragraphs that are going to tell you exactly what's going on, as I do every morning with each instrument. They're not going to be something that talks and rambles as long as I do, but it'll give you a long-term, intermediate-term, and short-term view. We've also got a real-time, a chart that you're going to be able to click on the cell, and each time frame on any instrument is going to pop up a chart, show you a bar chart, paint the levels for you. And that way, at this stage, I believe this will be pretty self-sufficient. And you may not need a charting package to make decisions, hopefully. So now that we're off the tangent, let's go back into the dollar. And as we've talked about this, we've got to look at the euro. So big day for the dollar. Could continue to go south, but I think the odds are in your favor to possibly stop here. We also need to talk about crude oil severely. This is our euro. I got stopped out of this yesterday. This is our 114.47 area that we talked about, hoping we would get back in there, closed above, and now we're coming back into this. But I'm in a wait and see mode on the euro. I don't know if we're going to come back up into this 116.79.80 area, and I'm just going to kind of wait and see because the dollar obviously is a function of 6 major currencies, the euro being probably the most heavily weighted in that formula, and the euro with the dollar sitting on support and the euro kind of coming up in here, overshooting it. I'm going to wait and see if this kind of gets back down below. I think the dollar trades a lot better than on the long side than trading the euro from the short side, from the long side. So that's going to be a little bit of a tug of war here. And it will be a very remote chance that both of these go in the same direction, because they're somewhat inversely related. Let's get into crude oil really quick, because this is the one that just blew a gasket yesterday. And we talked about this. That's interesting. This is our weekly view. So what's happening here is we've got a profile that more than likely now is locked in going up here. Got a green bar. We don't see this very often at all. That means we've overshot the top of our box that we're probably going to see predicting to happen here. That is very super mega change of tone bullish mode. And we talked about get this close above 48.78. That happened. Now we did a little bit of an overshot yesterday. I'm not. We talked about yesterday and quite a few days. It's the risk is to be short crude oil, and then we had a barrier here, 45.09. You could pick some battles there, and then we talked about that was the first hint. It was okay to kind of get your toe in the water, and then a close above the profile. This is the first technical damage we've had on this particular scene. Why are my charts screwed up here? Huh. Well, going back in time. 90 bars back. Okay, we'll change that. Somebody changed my chart. But I was going to go back in time really far, but we don't really need to. Just wanted to show you this is the first technical damage on the daily or the weekly, if that's going to be the case of both profiles, since the $100 mark. So this is a pretty serious change in tone relative to profiles. Now, if you're looking at these charts without the profiles and without looking at Navigator, which made higher lows relative to lower lows on price action, you wouldn't really see this. And, you'd say, okay, well, got a 8% or whatever it was, 15% rally or 20% rally in the world's energy supply in a couple of days. And that's lovely from the long side. But if you're looking at these from a technically damaging event for the shorts, this is it. So take that for what it's worth. Your stops more than likely should be below 48.78. We didn't get a retest of that yesterday. We could rattle around here. I'm going to show you our 240s. My goodness. We don't have the history I was looking for, but we're going to fix that on the next break. And by the way, here's all our inflection points on crude oil within the scanner. And as you'll notice, the S&Ps up here on the breadth, we're going to talk about that, are super mega positive again. So we'll be right back, folks.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. We're looking at the XLE. We finished up with crude oil, and we talked about a new box appearing this week on the XLE, and we talked about leveraging off of this 74.18, and we talked about the target. In fact, even yesterday and the day before of 80.07. Now that was met yesterday, 80.40 and some change, and now we're backing off just a little bit. So targets have, 74.18 into 80 and some change. It's a 6-point move of $74 ETF, and putting that in perspective, it's, what is that? That's about a 8-point-something% move in the XLE, and that was really about all for right now. If you're looking at it from a long-term basis, I actually think we could move higher, but right now that was kind of a trader's bounce, and don't know if we're going to move any higher right now on this. We've met some serious resistance at around 80, and that's about and here's the daily situation. That's about all I'm looking for right now. Crude oil may move higher, but the good news is the XLE, as you know, had showed its hand a little early, showing that relative strength relative to crude oil. And again, if crude oil kind of consolidates here, some of these XLE stocks, which obviously drive the XLE, may kind of take that as a great sign that maybe the storm is over, and they may just drift higher. But right now, the trader's target has been met. Now, will we move higher? Possibly, but right now, the long-term investor, I think it's okay to be long, not okay to be short when it comes to looking at crude oil and the technical damage that happened, and then the intermediate situation. We may kind of relax a little bit here on the XLE, but that's just the way we're looking at it. The XLF, I've been relatively bearish on this. It hasn't performed as well as the market in general. We met some targets after 2370 on the short side, getting back down into 2298. I know that's not a big move. And again, what is that? It's a couple of percentage moves down, but we've obviously rallied back up into this inflection point, and now we're above it. So 2370, we're trading 2377. I'm still relatively bearish on this particular product, and that's a great leverage point to pay attention to. You got some resistance up here between 2370 and 2394. If you're going to play a relative strength game, the problem is the U.S. stock market has powered back up, breadth positive, and this is a high beta situation in normal circumstances. Looking at the XLF, the rate environment is not very sympathetic to this particular sector right now, but the market could drag it up. But again, if you're looking for situations that may be relatively weak, you've still got one on the board here with the XLF. And if you were looking for more than this on a move down below 2370, we've had a massive move up in the market again, and the XLF has just gotten back to where we started. So again, I like this from the short side. If you're going to put a gun to my head and make me short something, I like this. On the other hand, looking at the healthcare sector, I'm still a huge fan of this. And I really didn't get the impact of this personally until recently, looking at, and this is the daily, I'm sorry, let me pull up the weekly of the XLV. Didn't get the full impact of this personally until I started messing around with the Obamacare situation, forcing myself to be signed up. And that was a while back, but from a relative strength standpoint, and looking at some of the internals here, and somewhat of a safety play when the market's got a little crazy there, I still like this sector, and 6934 is going to be where we orient stops below. And I know we kind of have had a little bit of a rattling move down this week, but again, the market's been super volatile, and there's no gimmies here. But long-term stops on this have to be below 6620. I think tighter stops can be below 6934, and just keep turning the wrench the same way on this sector. I think we could possibly move higher. And if you step back and take a look at, what's the near-term target, 7136 and even higher, in my opinion. If you look at this, we haven't had a lot of divergences, and this particular sector, with a little market help, may go actually a lot higher. We'll be right back after this break, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. I've got Anadarko Petroleum Corp up right now, and we talked about this the other day. I'm not trying to always pull up things that seemingly worked out after we talked about them. We talk about things that don't work out sometimes, but I've got in the scanner, I've got the XLE pulled up, and just as a corollary to what we were talking about in the crude talk that we were having earlier, we want to, when we were looking at the XLE and noticing that relative strength situation relative to crude oil and thinking that that was the better, safer play if you're going to start nibbling on the long side from 74.18. We were drilling down into this, and I just want to show you that a lot of these XLE related stocks or internals of the XLE have crossed the border on the daily above profiles. And if I go in here and start doing filters, which I can do, and we're actually adding now on the C-sharp version of this, we've actually got filters you can run on each time frame simultaneously. That's actually going in here also. But this is such a small list, I'm just going to kind of eyeball it here. And we looked at Anadarko because our landscape view, we had noticed that this situation was before us the other day. We were looking for stocks that were hanging in there and sitting right at major inflection points. And the other day we picked this one out because we were trying to find the stronger stocks in the XLE, the ones that were still trading above profiles. And looking at this buy point around 77.77, we're trading, what is this? Well, let me see what the pre-market thing is here. No, let's just call it 85.60. That's, what is that? 10, 12, 10, 8. Well, that's a 12, 13, 14% move in Anadarko since we were talking about it. And obviously that is more than the XLE move. And in a percentage way, it's probably a little less than what crude oil has moved. And that was a little bit of an exaggerated move yesterday. But this is kind of the premise of the theory. And you're trying to find strong stocks in a weak market within the sector. And trading the XLE or throwing the dart at the board on any of these would have more than likely worked out. But this one, we always try to figure out, what's the riskier trade, or what's the not as risky trade. And this one seemingly at the time gave you a battle point almost to the tick there. Let me just see what that was. Low of 77.95 and the inflection point 77.77. So we got very close to that. Met some intermediate targets, and then obviously yesterday was just full on. All right, and I see that the jobs report is out. We're going to talk about that in a little bit. But that's just an example, and I want to pull up a couple of other ones while we're in this sector, because oil's on everybody's radar screen right now. Which ones are not really performing as well? We looked at KMI, and let's look at KMI again, Kinder Morgan. And I think we had talked about kind of laying off this one. Let's see here. Actually, no, we didn't talk about laying off that one. This is our weekly view. This is our daily view. This was one of the ones we actually did talk about from the strong side. I remember that. So we looked at this, and now it's actually underperforming relative to the other stocks. Now, a lot of times, and this is kind of weathered the storm a little bit better. So when I pull this up and I look at this on a continual basis, obviously this has not been getting the crap kicked out of it by some of the other oil stocks. On a relative strength scale, it's been showing itself really, really strong. This is one of the ones that even though we're below profiles right now, you just got to look at this for what it's worth and look at any divergences that are going on here. And Kinder Morgan is something actually that's holding up, but to make the most powerful move in the shortest amount of time, obviously this is not making that type of percentage move because it wasn't beat up as much. I know I've said a lot there, but what would you do with Kinder Morgan? And the scanner's kind of showing you at this stage that this particular stock is not cooperating as well. This is one that is not going to have the rubber band snap effect as the other ones. So safer play more than likely, but more bang for your buck, probably not at this stage. So we didn't get the move up. We didn't get the snap back happiness that happened when crude oil was climbing there. So this is one that that may just kind of drift around here. It may not be the best compression of time, I guess is what I'm trying to say ultimately. Let's pull up a couple more here. Noble NBL. Let's just take a look at that. This was kind of similar to the XLE, had kind of showed itself in this 45.75. I know I'm kind of being a Monday morning quarterback now, but again, that's where your stops are going to be oriented on something like this. The scanner gives you all these things. And on a daily basis, it had actually been above profiles for a while. And then we had the profile appear below, which was very, very bullish on this. And as you can see, this divergence, lower lows, higher lows on Navigator. And then we had that XLE kind of pop along with crude oil, and this one popped relatively well. But as you can see, relative to Kinder Morgan, as I was showing you before, this one had gotten the crap kicked out of it. And that rubber band effect is going to be a lot on the north side, is going to be a lot more prevalent on stocks like this. But this one kind of gave you a lead time on that. And as you can see by the scanner, where's Noble Energy, excuse me. We've been above daily profiles for 12 bars. So again, that's something to, that's got a little bit of lead time there. Phillips 66, we looked at PSX. That's been above profiles for 11 days already, even before that snapback. Schlumberger, we're going to take a look at that really quick. SLB. Some of you guys are probably in these things looking for a pop. And here was the situation on Schlumberger. We got right down into that 79.48 about the same time all this was going on, trying to buy the XLE. If you'll notice, the XLE kind of, gotten back down into that 74.18, and then all of a sudden, boom. But we reached a low here, 79.52, and then 79.48 was the inflection point to pay attention to. So this scanner gives you all these inflection points ahead of time. It kind of lets you know what's on the radar screen as far as relative strength and relative weakness to those particular sectors. Last thing, we're going to pull up Valero. As you can see, Valero is actually cleared and above weekly and daily. So let's go into that. BLO. Then we're going to get into gold and talk about that just a bit. Now, Valero really had the close above and was just showing. And again, this is not going to be that rubber band snapback situation, but it was a very, very low risk trade, in my opinion. Didn't have a total come back into that 49.68, but now we're, as of yesterday, 54.38. And Valero Energy, what do you do now? Here's the daily. This has been, technically damaging event for the shorts above 46.19. So, God, we've had a 20% move in this particular stock. And what do you do now? I think you've reached some targets on the XLE. I don't know if crude oil is going to power up again. So maybe time to look at Valero's. Just, we've had our moves in the products in the XLE. We've reached some major resistance. Might be time to take some weight off the table on VLO and sit tight until we have some new profiles appear up here on our daily, new inflection points to possibly buy support or just take a new look at this, if that makes sense. All right, here we go. Let's take a look at gold. Let's get out of the energy for a little bit here. Gold, we talked yesterday pretty religiously about this area, 1267. And I'm not a big fan of going short gold. Obviously, that was a stop out. That was a little bit too much pain for me. Reached a low of 1255. We're trying to kind of walk you through gold on what to do here. We've had, this is very reminiscent, starting to be is that 1200 area before we had the breakout. It was a lot of stop outs, and we always talk about lose a little, make a lot, and then you made a lot. Very similar situation here. You kind of got to be in it to win it, so to speak, and the 1267 area is still going to be the fence for me. Now, if you look at this without the profiles and just strip these out, to me, you've got a breakout that happened on the weekly. You're consolidating to some degree above this breakout. And if you just strip all this out, this could be looked at as a continuation pattern. That's the way I'm looking at it. But, we've got to be able to pick battles. And those battles, in my opinion, are 1267, whether you get stopped out or not. Having a close back above there like we had the other day and go back and retest. I'm going to blow this up a little bit here so you can see this. It's provided some trading opportunities. I'm looking at this, and we took some off around the 1300 general neighborhood and the new buy point, 1267 on the pullbacks. A little bit of noise there, too much for me. But again, I'm still trying to play this game from the long side above 1267. How's that? Any questions about that, please call in. We talked about silver also. And we talked about silver meeting some targets here around that 1830 area. We also talked about 17 buy areas on silver. It would be really, really cool to see silver and gold kind of consolidate, gold above 1267, and it's obviously going to have some noise there, and silver kind of staying above $17. And there's the targets on silver, recent targets that we talked about on that bounce back up from the $17. We met those at $17.73. So what do you do now? I still think you look at this. I mean, the $17 area with stops below, and just kind of wait and see what happens on silver. If you can trade a little bit lighter on this until gold and silver kind of figure out what's going on here. I think the major move has been made for the time being above 1200, and right now we could be on shorter term time frame trading opportunities for this, kind of in a trader's marketplace. Okay, let's take a look at the treasuries really quick. Talked about, the situation here, the stop out, and kind of a wait and see. Now we've got a new this is our daily on the 10-year. Now we've got a new profile that's in force. The new buy point on this for me is 129.13. We talked about laying off this thing up here now until we got some new information. That new information now is 129.13 on the 10-year. Stops down below there. And as you can see, these profiles continue to trail up, higher highs, higher lows. And we've talked about just completely blocking out the short side on the 10-year and all these treasuries, the Boone and everything else included. This is our weekly. This is a pretty big pullback, and that's what stops are for. If you've been using some of these to trail up. Okay. And long-term trend is still in force north on the long term, but again, you've got an intermediate buy point there, just like we talked about. Okay. And I want to pull this up here. This is the Euroboon. Let me just pull this up if anybody's trading this. I like to look at this because it's just mind-boggling. This is our weekly. It's just not even worth looking at. The Euroboon, I think everybody's got to wait patiently until 158.06, 158, 158.06, and that general area. So the Euroboon gave us that orange bar, new box attempting to appear, new supply up there, and now we just got to wait, sit tight, let this thing rattle around, come back to support, and that support will be about around that 158 area again on the Euroboon. This is something, in my opinion, not to be shorted. Doesn't have a lot of reasons at all to look at that from any other way but the short side. Let's take a look at the S&Ps. Got about 45 seconds here before the next break. 1988, and we reached a low 2 days ago of 1973. So 1968 was a big number. 1988 obviously was a big number. 2027 was a big number. We talked about that yesterday a little bit. 2052 is the new resistance area up top, and 2027 still down below. So right now we've gotten above 2027. We closed above there. 2027, again, more than likely now is going to be the buy point. And I'm basing this off of looking at our breadth. We're going to look at the breadth charts in just a little bit, folks, when we come back. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Hi, guys. Going to take a look at the Shanghai. Somebody was asking about that. First of all, we're going to start out with the breadth situation. And now you guys have access to all this. I'm going to pull up our breadth on the Shanghai. I'm going to look at our breadth, looking at all the internals. And I'm just going to blow up the last section here. I'm going to take out the middle ground by clicking that off. And just to remind you guys, July 11th was that crossover to positive breadth on the Shanghai. July 11th. We're going to kind of dig deep into this right now. We haven't crossed back even remotely close to negative breadth since then. So July 11th, let's take a look at that. And going back in time, there's, well, July 14th, whatever. There's the bottom of the box there, breadth turning positive. And when we got the breakout, that just mega confirmed that this thing was changing tone from sideways or south back into positive breadth. And what's happened since then, one of the largest moves in the Shanghai in the quickest amount of time historically ever. All right. So, and we found some battle points here to buy along the way with that breadth staying positive. So remember, it's been okay to be long, not okay to be short on a long-term basis. And whenever you find that support, namely another big support back in October 27th, and then that catapult move up, you were to kind of blindly pick the battles from the long side with stops down below. Now, what do you do now? So new weekly profile appeared last week. Came back, and actually that orange bar predicted that, hit that inflection point to the tick. And that doesn't mean to go go all out in short mode. It just meant that you probably reached a target environment, and we got to take a relook at this. So that was kind of last week and the week before. And taking a look at the situation on the current breadth, dailies mixed up with weeklies, but long-term breadth is positive. We're coming into inflection points. I like this for picking a battle right now. We've closed above on the daily, back above, and we come back and retested. All right, so 3159, 3160 is that, close above, come back and retest. Got the long-term trend in your favor. And you've also got something else I don't talk about a lot. You got this DMZ between the POC on the weekly and that daily infra high. Now, why am I mentioning POCs all of a sudden? Because on very wide profiles, we've got to pay attention to those. All right. And paying attention to those, and I'm going back, I'm getting rid of this, and I'm going into this is the only stock there's the Shanghai 180 if you ever want to drill down into the individual stocks, but we've actually got the Shanghai as the only index in the futures area. And I apologize for that, but that's just the category we thought we'd put it in. There's those inflection points. There's the POC at 3110. I want to pull this up for you here. You can see all this, and you can see 3159, 3110. This general area, this DMZ, is going to be a collection area for me, as it has been the past day for the Shanghai, and I'm basing all that on looking at the breadth calculations. And if you guys pull into the daily here, look at the daily breadth on the Shanghai. This is our situation, and it's been a little bit of a mixed bag lately. And the dailies obviously turned negative around that January 29th area. And looking at the dailies on the Shanghai, there's the January 29th. So if you're trading on different time frames, obviously take that for what it's worth. But right now, long-term trend in Shanghai's up. We're looking to buy support. Thanks, guys. Have a good day trading. Steve Rhodes is next. Stay tuned.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.